Good evening, guys. Ken of Tortoise Capital, weekend report review and weekly performance for June 16th, 2023. Start with the hybrid swing on 30 minutes, beginning with Alcoa. Initiated the SSC from this support level, looking to get to these price levels next week. I will stop and reverse if it breaks here, and then I'll be looking for a return to the 10-day low. AI, I re-entered Kata 2. Looking for that. Looking to get above 48 next week. Caterpillar closed the Kata 2 entry from yesterday, peaked and then came down. It hit the PSAR, had to get out at a fractional. Cliff, the short, it broke this gap down to here, continued to sell off, shorted, didn't want to hold it over the weekend. We took +1. CVS, what a rocket sled this thing has been. We took the short and cashed. It broke back through. We enjoyed this and then ended up getting out with a scratch today. Then today it continued to break down, so I said, why not? Let's short it and get +1 and then no overnight or over the weekend risk. Mostly just enjoying the ride. Dish Network, long slide, SSC, standard work, +1. I will hold that over the weekend. This resistance level here, both of those look significant. So if it can get above 675, this has a chance to get back to this gap down. And then if it breaks through here, it can get to 750. And then if it gets over 750, it can really go to the 10-day high. So that's some heavy sledding right there. So I'll be willing to get out of this trade at any one of those measured levels of resistance. I'll scratch this before I lose any money, and I will get short if it falls through there. So Dish Network, the ball is in your court. Devon Energy, no trade. It's getting into a sideways quiet channel. Electronic Arts, I took the PSAR break short and cashed for 1 intraday as a gift. Emerging markets, we closed at a no lose plus dinner for 2. We were up over +1. I held it through the PSAR flip error. Took no lose plus dinner for 2. I wanted it to do better. It just couldn't. Ethereum, I initiated the PSAR flip and the SSC, and that closed really well. I probably should have just got out of it, but that's holding about +4. Mexico, we closed the Kata 2 at a scratch. This one was a loss. This was a emerging dragon that closed well, but then it gapped down to here, so we got out at -1. It rebounded, and there was a revenge trade, but wanted nothing more to do with it, so Brazil was -1 today. Intel. So yesterday at the close, we reinitiated the Kata 2, and today it went up, came back, found support, and then resumed. I took that as an intraday Kata 2, and I like Intel, so we're holding 2 positions with a nice gain, and this is above the emerging dragon, so I really have high hopes on Intel. That will be my #1 priority for managing on Monday, because that's 2 positions with not a lot of safety in the bank, other than the fact that this week is going to look like a really positive week for Intel, and I would expect more buying pressure next week. If we look back at that, that has really climbed out of the hole pretty nicely, well above previous resistance. So I think that thing is free and clear, and I feel pretty good about it. Let's look at the if we look at the daily, yeah, it's cleared. It's at a 150-day high, like that, and the 3-day looks pretty good. It's climbed out of the hole pretty nicely. 9 days going to look good. So the 9-day, it is just kind of recovering. And remember, this is before it's gotten a lot of money and production out of the CHIP Act that's bringing all the semiconductors back to America. So Intel, that's a long-term keeper right there. They are back, and we've enjoyed the ride off of the bottom of a great American company. And I want you to notice how powerful the 9-day PSAR flip is. You can bank on that when you're talking about blue chip stocks that are national brands, especially in tech. I mean, holy crap. That's Microsoft, the same thing. Notice the PSAR flip on the 9-day, and that was Microsoft at 245. And while we're here, NVIDIA and Clean Energy's getting ready to start. That's not a national brand, but Caterpillar is. And when it makes those PSAR flips, you can bank on it, and Caterpillar hasn't made that flip yet, but it's going to. McDonald's, yeah, PSAR flips galore on the 9-day. So just saying, you might want to pay attention, and that's the S&P on 9-day. That's been a reliable guide, and now you can see it takes a little time for it to unwind, but once that flip happens, that's like the big fat cat long-term buy and holders have recognized that's America on sale, and there's a chance to get in. That's what the cool hands look like, and now it's well into the summer, and it's obviously good. But it's not so obvious back here, but you have to have some belief in math. Tesla in early days of the PSAR flip, and that was getting it at around 180, as we talked about, and now it's looking pretty good. U.S. Steel. Probably ought to do one of these, like a 9-day speed run on these. Note to self. So, back to work. Where were we? Caterpillar recovered. Chevron, Dish. I think, we were on Intel. Yeah, so Intel, little to no worries about this one. Getting 2 positions. This thing is so deep in the money. You couldn't persuade anybody that bought it earlier days to get rid of this. This thing's in great shape. IP, no trade. Real estate, no trade. Regional banks, we closed the COTA 2. It just wasn't working. Lemonade is getting ready to rejoin this giant support level here. Has triggered 1, 2, 3 really strong moves. That looks like profit taking. So I'm looking at this as a support base, and I'm expecting that to go. McDonald's closed a 2-day emerging dragon for about 5 hours. Happy with that one. Merck, no trade. Microsoft closed a 2-hour trade from an emerging dragon. Marijuana, man, I wanted to short that so bad. Span of control. And sometimes you got to let them go. Sometimes you got to throw the fish back. And if you can not trade something you really, really want to trade that meets all your criteria, then it's very easy not to take shortcuts on other ones. NVIDIA, if there's a better example of a COTA 2, I don't know. higher lows, PSAR flip after a long sideways quiet channel, leg 1, leg 2, leg 3. This one gave 4 legs and came all the way back to the PSAR. The RL10 came back to the PSAR out, and that is 1, 2, 3, 4, 5, 6, 7, 8, 9R on 1, 2, 3, 4 days on one position, and it was never at risk. That's the lowest stress trade you ever saw on the most important chip company in the world that's partnered with Microsoft on AI. So that looks like just regular profit taking from that beautiful run from 390 to 440. So I'm not done with that one yet. Clean Energy initiated the short on the COTA 2 short. Rivian took the intraday gift of a giant breakout, dragon horns, failed, came back through the RL10, which reversed. It moved 1, 2, 3, 4 MMRBs off the top, so just short, and then it rocketed all the way down to the support level, exactly where you would expect it to reverse. It reversed, so just take 1, 2, 3, 4. Just take 4. On the 30-minute charts, you can watch 30 symbols and make decisions in 5 seconds because it's only adding one more bar. In the S&P, this is an orderly rollover. The second leg down was problematic and it closed poorly. So this is the support level that matters, 437 for Monday. Treasuries, no trade. Tesla initiated the COTA 2. It ran up, came all the way back to scratch. So I'm not going to lose money on it. U.S. Steel, I missed the short. This is at a very interesting price level here. This stable zone right here is right at key support levels. And here's the gap. So if this thing starts collapsing on Monday, I'm short all the way down to here. And if it's going to do that, it wouldn't surprise me to see a gap, and that's why I want to wait and see, because this could also very easily break above this, and really go. So this is a perfect critical state. U.S. Steel, that's going to be a great trade on Monday. And notice the Red River has rolled over, but it went into the winter and is now poised right at a decision point in MACD. That is a perfect critical state. That's how you identify them. Somebody asked me that question yesterday. All right. This is Sniper Trade of the Day. So we had, here's where it closed yesterday, and again, we're on 3-minute charts. This one is on Brazil. So here's the gap down. Then it sold all the way off to here, found support, and closed there. So that establishes the lower limit and the upper limit for the OR3. The next bar opened here, ran up, and closed here. So it's right in the middle of what we could call just a yellow zone. So what's it going to do? Nobody knows. Don't know what it's going to do. My risk box is this big. And I'm ready to go long here and short there. And if I bring this risk box over here, that's basically, if I was long there, the risk box would be something like that. If I was short here, the risk box would be something like that. Check or hold. That's all. That's all it is. Just waiting to get in. We get long. Now, on the very first bar out the gate, when your stop is here, would you be wrong if you just brought your stop up to here and went right below that bar and just said, let me just lock in that little piece and get rid of all my risk? And let's just call that no lose plus dinner for two. Because this is a 10-cent risk box. And so on a $400 per trade risk, you could have 4,000 shares. On a $100 risk, on a $100 risk, you could have 1,000 shares. And now, if that's 10 cents, and this thing rolls back to here, and I get out, and I've made 3 cents, if I risked that, I'd make 120 bucks. On this one, I'd make 40 bucks for 3 minutes work. That's $800 an hour. Oh, but it zooms all the way up here. Nice. So it is now rolled up into here. It's reached the PSAR. It, from the gap down to the previous close, it has made a 50% retracement of the gap. And we're holding 1, 2R. So that means if we had the $400 risks per trade, we're already holding 800 bucks. If you risked 100 bucks, that means you've earned 200 bucks for 1, 2, 3, 4, 5 minutes of 15 minutes of work. So that's still working at 800 bucks an hour on a $100 risk. So if you know that and you want to lock in 2R and you had your stop here, would you be wrong if you just move your stop up to say 2R, something like that? You wouldn't be nuts. But then if it didn't fail and it broke through the PSAR dot, like it came here and then resumed, and it broke above the PSAR dot, and you've already got more than 2R in hand. You have 2R in hand plus a little buffer. And then this thing from your entry, that's the next bar and closes right here. Would you be nuts if you brought your stop from here up to here? No, you wouldn't be nuts. And then cash it at an orderly position like that. You know, this thing peaked here, went 1, 2, 3, and then you just catch it at the edge of the dragon. So right there. So there's your gain. There's your risk. 1, 2, 3 on the first one. Second one gets +1. So you got 4R. So if you had risked 400 per trade, you're holding 16R. If you had hold 100, you're holding 400. Okay, -10 for the commission. Really? Are you going to fight over that? You're going to find an efficient way to do it. But why would you make decisions to enter or exit on the basis of how much it cost for the transaction? If the cost of the transaction is trivial compared to the gains and the risks, this is just noise. That's the cost of doing business. That's like paying gasoline tax to pay for the pavement of roads. I mean, be serious. Now, why is that an interesting trade? Well, it's an interesting trade because this thing, there was a lot of concern, apparently, because the the huge gap down, and then it rocketed all the way back up and closed the gap, and then sold off hard, and then it tried to recover and couldn't make a new high, and the R10 rolled over. So now what do we have? Well, we have a peak, and a peak. Now we have Kata 2's lower highs. We have a collapsing dragon right here. So if price were to fail through here, I absolutely want to be short. But if price falls through here and it breaks that, here's where all the stops are. For everybody that was buying this here, this is where all their stops are, right here. So if this price fails through this, what happens? What happens at this price level? What happens at that price level if price goes through here? It's an explosion to the downside as all of those stops get hit, and this thing goes like a cannon or a falling piano. So I don't want to chase that, because if I initiate the short here, then I'm going to get filled somewhere in here. I don't know. So I'm just going to take the Kata 2 short in this little indecision zone right here before it hits that crucial price level. Hey, I hope I'm wrong. Hey, what's the price that I'm going to get out of this thing anyway? At the top of the dragon. So I'm not even going to take a full loss on this, because my risk was this one. Why? Because that's the same standard risk that I took here. Where does that come from? It comes from statistics. I don't even have to think about that one. This is 1/10 of a standard range stat. So it can move 10 times that size on a normal day. But I'm not even going to take a full loss on that, because if this does not fail but starts going back up here, I'm going to get out at the top of the dragon. Because if this is going to work, it's supposed to fall fast, and it's supposed to catch all of these stops, and it's supposed to explode to the downside. That's what it's supposed to do if it works. But if it doesn't do that right away and starts going north, I'm just going to say, hypothesis is over. Maybe this big gap was a fake, and maybe the real trend of the day is going to be that upward move. But I'm not going to think about it in the middle of the trade. I'm just going to say, look, there's my standard risk. I'm going to take that much. That's where I'm going to stop and reverse. And if it breaks above this, I'm going to add a second position here. Already done. I've already imagined the worst thing that can happen to me. The worst thing that can happen to me in this is that I take a minus 0.5 trade and I'm long in the direction of the primary trend of the day. That's not a bad day at work if that's the worst thing that's going to happen today. But if this works, could this thing come all the way back down to this price where it opened? It's already been there today. So that's not even irrational. And if it fails below this one, you can bet this thing is going to collapse. All right, so I hope that works. Starting off okay. Getting some traction. Look how good the PSAR is. Look at the relationship between the PSAR and the price. Don't pay attention to the noise. Pay attention to the price. Oh, there's a winter. There's spring. And here's where price crosses the PSAR, so get out. That's worth 1.5 R. Plus the 4 R over here, we're at 5.5 R this morning. And now this is all lunch. Do you want to trade through lunch? Trade. If you don't want to trade through lunch, collect 5.5 and go play golf. I went and played soccer. Sniper trade of the day. All right. This is Dan, and he's working on, let's see what we got here. This is the daily chart. Looking like trying to get long. It's above the previous peak. It's testing the R10. So it has to get above this, above 144 to really go. The move was this. This thing sold off hard. The next morning it broke down below all. So that's a great short. And then he lets us come all the way back to here and takes. That's a minus 0.5. This would be the 1 hour stop out. Hey, guess what that is? If this doesn't work, maybe this is the trend. And maybe this is a COTA 2, and that's your entry. And then you get out here when it hits the PSAR, and there's your risk box, and there's +2, which pays for all of that. I don't disagree with that trade. I like this exit. I love this re-entry. And when it gets above this price level here, you could consider a second position. Now remember, it had to get above 144 to be significant. What did it do? It went right to 144, which was the previous RL10 peak. So when this doesn't go, when that doesn't go, you don't even have to stick around that long. You could get out right there. Devon Energy, nice bottom one. Here's the PSAR flip. We should be entering right here. This is okay. It comes back to here. Just get out. Why take a loss? Why take a loss? Don't take a loss. Don't trade the first bar. Here's a gap. Rolls all the way up. No, as you were. Sorry. He gets long here. It fails immediately. Takes a 1 hour loss. And then it immediately reverses. And there's a 2 hour gain to here. Comes to here. Here's a PSAR flip. There's a trade. Here's a trade. COTA 2s all day. Here's the peak. This could be a second position. When this fails, don't let it go back into the resistance area. Support, support, COTA 2, perfect. Takes a turbo exit at the end of the day, so he's not holding overnight risk. The next day it opens up here to the Z3 and then starts to fail, so he takes a 2.5 gain. Perfect. On this failure, could we get short here with a risk box there? Yes. And cash another 1.5. Good. Over here, could we take an intraday PSAR flip, and then right here you're holding a trade and say, do I want to stay overnight or not? Your call. But you're holding almost 1 hour, and then the next day you could put the trade back on and get this intraday on 30-minute bars. This is Steve, and he's working his mojo on some cryptos. I'm just going to tell you, on this crypto, you need to be paying attention to the PSAR flips. Oh, collapsing dragon. PSAR flip, scratch, PSAR flip, cash, PSAR flip, cash, re-entry, scratch, short, scratch. You got that scratch anyway. Collapsing dragon, short, cash it for a win, rolls over again, short. You should be watching the PSAR flip on this thing. This thing, you know why this works? Because everybody that's trading that is not a professional trader, and they behave like herd animals. This is not market professionals on both sides trying to fake each other out. This is a bunch of guys with fear and greed, and that means their psychology is easy to identify. PSAR flips. Sideways quiet channel, PSAR flip, emerging dragon, crush it, short, short, long and scratch, short, long, short. Smash these things. Oh, God. I need to just go trade this stuff. Gap down, find support, PSAR flip, long, get out, re-enter, long, get out at the edge of the dragon, PSAR flip, short, PSAR flip, long, second position. These are, now, the actual trades, excellent trade, excellent trade, excellent exit, very disciplined. That's about 5R as traded. A peak, a peak, a peak. This is supposed to go. It doesn't, so that's telling you this thing is failing. And now here is the stop and reverse, and he gets paid 2R against a 1R loss, and that's 1. Should be. There's your channel. There's your breakout. There's your exit. You try that short, that's good. When it doesn't fail immediately, get out when it crosses the dragon. That should be long. And then this trade pays for that little micro loss. Damien, check your math. If that's 1R short, if that's R, and you're here, and you get out here, that feels like it should be 2.5R, not 1R. This long, with a risk box here, that's minus 0.5. That looks correct. This was a error. He wanted to buy it with a risk here, but he actually inadvertently shorted, and when he came back, he realized he'd taken an R loss. So check your math on this one. That one's correct. I don't know that I'd take that trade, but I understand it. All right, our prop trader, Constantine, what's he doing? What he always does, gold, dollar on the 2 minutes. Here's the trading range that he's tracking. It holds support. It's fake 1 goes 2. Buys it, standard risk, crush, 9R, 2 hours. That's why he's trading with $2 million of other people's money. This is the opening of the New York, the peak. It drops a risk box. He gets short, 5R into the PSAR flip. That's gold on the 1 minute. The gold dollar on the 1 minute. All right. I think this is Hamad. OR3, perfect short. On this one, see how far down that came back? It came all the way back up to Z3. I want you to take it there at the Z3 line, because that is an abnormal move down. And then when it comes back and closes here, that's called a bottoming tail. This was an anomaly, and so that's still a good trade. Now this is an even better trade, I think. When the RL10 cannot even get into the dragon, but fails immediately right here, and then you put your risk on, that's perfect. That's perfect. I'd like to see you get short right in here instead of here, and then scratch that. I like that long. This is good work. There's a little bit more we could gain off of this bottoming tail, but otherwise that's pretty good stuff. Intel. Now I want you to notice all of these trades are inside the Red River, which is perfectly sideways. Don't trade any of those. Where's the Red River and the breakdown? Here's the first place the Red River happens when the breakout happens here. It goes below the 0 line into the winter right here. There's your signal. This is all noise. The Red River, you've got it on your chart. Relax. Wait to see the Red River. You know, the extreme condition happens is, you know, this Red River down here on MACD is the smooth 1030 moving average differential. That's so inside the Red River is normal. There's no signals happening in there. This is just normal noise between machines trading back and forth. When the signal line comes out of the Red River, that's the beginning of a breakdown in the winter. And when that reverses, you know, that's like the end of the winter in MACD. And then it rolls up. And then that's where it becomes spring. Until it comes back into the Red River. Then if it gets through the Red River, that's when it becomes summer again. But you're getting chewed up inside of the grind. Remember what the SSC calls for. The SSC, supported spring crossing, first must see a harsh winter. There's no harsh winters in here. The SSC is the one that tells you this thing is in play. The harsh winter, which we don't always get, then reverses. The harsh winter, when it's over here, says there is potentially a nice run back up to what used to be the previous normal. So the previous normal was up in here, and we think that's what the true fair value is. So the harsh winter occurs when price leaves that sharply, horribly, and then when it stops, you say, oh, it's well out of the Red River, like it's going to be when this reverses. And that's what tells you there's an opportunity trade, because maybe this was an abnormal sell-off. This was abnormal fear is what caused the harsh winter, and then the reversal says maybe there's an SSC coming. So you got to see that it's in play. This is just normal noise. Microsoft. Let's see here. Let's see. So I got 3 trades inside this. All right, so this looks like the OR3. So I'm trying to see where you got short. Did you get short? Oh no, I'm sorry. You got short here, took a quick cut. No, I'm sorry. You got short here, took an exit here for minus 0.6, then got short again when it failed to like a new low of the day. Okay, I see that. You're making it hard for me to read this. And then took a minus 0.6. Now, this reversal long, I think... No, I'm sorry. Didn't. You got short again on a break here and took that cut. And if that's 0.7, then maybe the box is too small. Now, the first time that it went into the winter was here. So if you just keep following your rules, this thing should make back all of those losses. Here's where the winter goes into the spring, so you could be thinking about taking your exit right there on this one, and it comes to here. Now, I love this entry. And it didn't pay off much. So that's a legit short on the violation of the PSAR. It didn't work immediately, so take it here, not here. Now, if you're going to take this one as a COTA 2, that's legit, except we're still in the Red River. But I like this one. I like this. I like that exit. That's just one that didn't work. The only thing I could say would be this was the extreme, and now notice the Bollinger Bands are pinching. Now I think we're trading inside the river. Let this, try to stay out of SQC. Wait for this thing to, now it's really compressing tight in here. Now you could, I think, start looking at this as an entry here, long, or an entry short there. This feels like over trading, but I understand it, and there are just days when that's going to happen. U.S. Steel. All right, so here's where it went into winter. So I actually want to be short when this thing goes into winter. So I want to be short here. When the OR3 doesn't work, you could be short there and then put your stop at the PSAR flip. So you could either be short immediately here or here, and then you should be getting this trade down to here. And then this should be a scratch, and then a re-entry short. You could try this. I mean, I kind of like that. I like this. When it fails, instantly short and get paid. That's fine. But this is just trying to cash anything because you're feeling bad about this. So you're feeling too much. That PSAR trust all the way down. Now, your worst week, if this was your worst week, then, man, you haven't even seen bad. If that's your worst week, you got nothing to worry about. A bad week is when you go deep into debt on a second mortgage on your house and lose it. That's a bad week. When I say don't, Dan says, when I say don't trade in the river, the MACD River, yeah. The Red River looks like this. What you want to see is a harsh winter, and then when it starts to reverse, now you can start thinking about an SSC. And oh, by the way, when you're up in price, stay out of the river. Because the red, in the price area, this is Crocodile River. In order to generate a harsh winter, price had to come all the way out of that and then make a sharp reversal. But if you're trading inside the river here, listen to this discussion from the foundations course from Thursday night. It spends an hour on that topic. If you guys are in the sound of my voice and you're not a foundations course, you should probably think about taking it. Brazil. Huge red candle. The gap down is a huge red candle. So when it's at this price level, imagine this thing had collapsed and gave you an orderly sell-off all the way down to here. Then you would see that as a 1, 2, 3 entry right away. But from the gap, you know this thing is in play. 1, 2, 3. There's your OR3. And on the sniper trade of the day, that was a 4-hour trade. Actually, this was the second position. This trade from here to there was a 4-hour trade. I tried that one short from here on the PSAR flip, you'll recall. And a good scratch. Here's a Z3 pinch. But I didn't trade any of that today. But I would understand that effort, which would probably scratch. Big gaps lead to big moves. When this did not fail further, wonder what it could do. How about go back to the previous fair value? Here's where it closed. It gapped all the way up to here. That is a big green candle. When that doesn't work any further, this is NVIDIA, 1, 2, 3, you could think about being short here. It wouldn't lose any money. But I like this reversal here. This is a nice reversal because you get kind of a Kata 2 action. It doesn't work, so you scratch it. No harm, no foul. Perfect. That's not, the risk box isn't too tight. You scratched a trade that didn't work immediately in your favor. Here's a PSAR flip after everything rolls over. This is an owl entry short. It's supposed to go right away. It's supposed to come down and at least test this, and then if it fails, you could add a second position there. But it didn't do that, so like you said, cut it right there and be done with it. Now it's a Friday. So you might have looked at this as a Kata 2 and entered here instead of there. But even on this one, which is an emerging dragon, that's a good scratch. So learn to identify and add to your repertoire. Microsoft gaps up from here up to here and then starts failing, and the move is from here to here, all the way back down to here. And I'm going to assume that that's a range stat. Could we get short here? Can we get short here? Yeah. If this was your risk box, hey, if this thing gaps up to here and then starts selling and you put a risk box on it right there, we could be short there? Yeah, so there's a move. But I love the Kata 2, and I love that we didn't lose money. I like the Kata 2. I want to cut it sooner, and the revenge trades gets it paid back, so that's still pretty good. But some of that opening savvy, now that you're almost through the foundations, those are some patterns that you should be able to see as well. Oh, and then talk about a collapsing dragon. Whoa. So why is Walmart nice? Because it's the opposite of a big tech company, although it's the biggest tech retail company ever. This is up, down, up, and fail. Kata 2, collapsing dragon. Call it what you want. That's still great. I don't mind if you missed that. You got the one that mattered at here, and that was 1.8, so we'll take that. This was the natural gas trade. We talked about this extensively last night. Took a fractional loss on the overnight hold. It didn't fail further, so he took that as the risk box, entered to our battle drill, took out here, and 4.7 for the day, and no overnight over the weekend risk. So this is supposed to work. It didn't. Cut it. Oh, it didn't fail? Then maybe. And then 2 our battle drill because of reasons. And then 4.7 for the day. All correct. All right, I will get the reports finished and sent out. I got to reset the spreadsheet. So tomorrow morning, storytelling for the boys at 8:30. And swing trade reviews. I will review the trades that you post. Tomorrow night we have soccer matches and a tournament Saturday and Sunday, so no live podcast Saturday night or Sunday night. Sunday morning, the normal time. Happy Father's Day, 9 o'clock and 10 o'clock for creativity and foundations Q&A. Ciao for now. Yeah, Damien, just all you got to do is just come to the storytelling thing. I'll send you the link.